welcome back to another episode of The Next Big Bet, a podcast series brought to you by Creddinv. Today, I'm actually going to talk to a VC, general partner at Paradigm Shift Capital. Hi, Govind.
Hi.
I'm actually very proud to say I'm able to talk to a person who has taken two startups to the unicorn level. He has worked with WeWork and InMobi. How has your experience been? Let's start with that.
Sure. Thank you for having me here. Fantastic experience, to be honest. Fundamentally, I started my career from big techs and then took the transition into startups. This is a time when it was probably early in the Indian startup ecosystem context that we are talking about startups. But I took a leap of faith, took a transition into that. That is something that is very, very close to me because fundamentally I always wanted to be an entrepreneur myself. I thought, probably start building with someone and sort of help that charter. And then probably from there on, I'll get to the entrepreneurship journey myself, which is what we are doing at Paradigm Shift Capital now. That has been an amazing journey. InMobi, as we are all aware of, is India's first ever unicorn, SoftBank's first investment in India. So fantastic sort of experience taking the company from, when I joined, they had just literally, started operations into multiple countries to now, they are probably, present everywhere. They have a unicorn within the InMobi space, which is called Glance. So, sort of saw the early rise of Glance when I was there. And then, obviously at WeWork in India, it is a fantastic setup. It's an independent unit of its own, works independently, owned by one of the largest real estate developers in southern India, and works very differently in terms of, I have always been questioned in terms of, how does it work with a comparative global WeWork model. I was like, we don't draw any comparison. We fundamentally look at what is the right thing to do for the business. And from a time when I joined WeWork in India, I think there were only 1 or 2 centers live to now when they have 55 to 56 centers, pan India, fantastic. I mean, can't be more proud enough to have gone through that journey. And probably having those experiences back in my resume. So I thought, this is probably the right time to now get into my entrepreneurial, spirits. A lot of experience that I got at InMobi, WeWork, even prior to that, working with global startups, Fortune 500 companies. It just gave us that understanding that, hey, there is a wide space available in the Indian VC context. So we thought, why are VCs sort of, not looking at opportunities which are more global in nature. You have heard about Indian entrepreneurs ruling largest big tech companies being out there, right? So we thought, why not look at a very niche space of founders who are building from India for a global market? And that became our GP thesis fit. I think, we are one of those GP fund thesis fit because we truly believe in that. Not only do we truly believe in that, but we have also gone through that journey ourselves. All 3 partners have always built global brands, have been at the helm of building, products. So that became a natural extension as much as, we started our fund.
That's great to know, actually. And let's actually talk about the early stage, right? Because VCs do come in the early stage of a startup. What do you think this actual early stage means? Maybe in terms of investments, we can begin?
Sure. I think for us, when we were thinking of building this fund, early stage was a very natural course of thought process we chose for our own investing thesis. The reason for that is fairly simple. We are operators. All 3 partners have built 3 unicorns in the past. We like building alongside with founders, so it's just not about siloed investments. So we thought, hey, what is that phase when founders would need probably maximum amount of hand holding or guidance, or just not look up to us as an investor, but as someone who have been operator turned investor, and then thereby you can leverage on their experiences. Even beneficial for us was all 3 of us came from very supplementary skill sets, right? I have a very different skill set to what my co-founder brings onto the table. So for any founder who was sort of looking up to us, it was like looking at getting a combination of various aspects of building a startup. So therefore, become a partner of choice for early stage founders. It's interesting. Not only was it interesting for us, but when we actually went back to founding community and founders community, they found it even more interesting. that, hey, there is a hands-on operator who are going to roll up their sleeves. It's not like, I've done my investment and I'm just going to sleep over it. So you sort of get into the rolling hands of it, and it's been a fantastic journey thus far. Doing early stage, for us, we do only pre-seed and seed at the fund level.
Okay.
But nowadays in the ecosystem, you'll hear all sorts of jargons, all sorts of concepts, right? There is obviously very clear demarcated difference between what is a angel round, what is a pre-seed round, what is a seed round, and what is a pre-series A round to a series A round, right? In my view, someone who has actually seen 0 to 1, 1 to 10, and 10 to 100, I still call series A an early stage, right?
Okay.
But if you think of it, I already spoke about 5 jargons coming to series A, right? So, to each on its own, but fundamentally there are very clear ways on how you start looking at it. When a startup starts into its operation, there is a founder who has an idea, who has a purpose of building something what they're looking into. The first approach that they take in terms of fundraising is reaching out to their friends and families, right? For us, that is FNF and angel round sort of mixed together. There are times when a VC would join in at that particular point in time itself, and then it takes the shape of a pre-seed round.
Okay.
Just because a VC is jumping in, should the jargon change? Not really. Okay. But then because of how the economics work, how the alignment works with the founder, it typically takes the shape of a pre-seed round rather than just an angel or a FNF round, right? And from there on, if generally these pre-seed rounds happen at pre-product, right? It's more ideation. It's more like white space or a space which someone would enter into with having a clear differentiator in mind, but largely ideation. You move to a seed stage when you have sort of validated some form of idea, and validation would mean that you have some traction. Some traction could be you have design partners, you have pilots with customers going on, etc. And then you graduate to seed. Pre-series A is basically a bridge round in one sense. It's been terminology as pre-series A, but anything fundamentally from seed to series A. So series A, for the benefit of everyone who's hearing this, series A is that milestone which is considered as like, there is real value being added by this startup. There is real action that is happening. The teams are adding, on a more compounded basis than what was happening in the market already. So a lot of investors actually take a significant notice of what is happening with that particular company at the time of Series A. So Series A takes that milestone shape, but anywhere if people have to do funding between seed round to Series A, that pretty much takes the color of a pre-Series A round.
Okay, yeah, that's a lot of information. But I think even in this span, before they get into the Series A, what risks do you think these people overlook? When they know that they are investing in a company that has not reached a Series A round, where there are good amount of investors, good amount of funds that's pouring in. They are just going to be one person that's going to invest in this particular startup. What risks do they overlook that later as VCs you see?
To start with, conceptually, an angel investor is someone who comes in as an angel, right? The idea of angel investing is not directly correlated to financial investing. So I want to make that differentiation very, very clear. It's been muffled off late. In the last 5 years, there are multiple products and platforms and financial products that have come in for an individual to make a choice from. But it's very different when you get into angel investing, because fundamentally the first thing you sort of come across from an angel investing perspective is just not your financial risk and reward, but in terms of what you can add as in value, right? A lot of angel investors are top grade operators, right? So from a founder, if I have to think from other side of the table, as a founder, whom should I approach in my initial rounds to build and raise capital from? Of course, if I'm a founder, then I'll always be looking at someone who can support me my initial journey, right? So that is obviously the time when you come in not knowing what is going to happen with this company. That is the futuristic aspect of it. So that is obviously very, very high risk. But at the same point in time, because you are coming in so early, you probably weigh in what is actually being built. You are also set up for a commensurate reward. So it's all about risk reward to start with. There are a bunch of things I wouldn't say overlooked, but there are a bunch of things you may not know of at that point in time in terms of how it will go. So largely the angel investor would look into the founder, the founding team, if there are a bunch of co-founders, and maybe a very initial prototype of, I wouldn't say even product, like, ideation.
Right.
If you are already a seasoned angel investor or a startup operator, you'll get into the weaves of it very quickly, right? In terms of, hey, I think this is already being built. What is the differentiator? So you will gradually, slowly and gradually, you will you'll get into the mix of asking right set of questions.
Okay.
I think it's not just about problem identification or someone has got a unique solution, etc., etc. I mean, those things are there, but just the natural course of conversation should make that angel investor believe that not only am I in this for financial reward that will probably come as a result of startup growing, but I want to see this cause, this purpose being served for. And therefore I would come in as an angel investor. So that is one thing that should be made very, very clear within their mindset.
Okay, so as VCs in a later stage, would you look at these existing angels on the cap table and evaluate the startup based on that? Does that happen?
I can't really comment whether that happens as a practice or not. At Paradigm Shift Capital, we really don't look into those as a signal setters. We look into certain aspects of it, but that doesn't necessarily make or break any form of decision making for us, right? But what we do look into is how is the cap table, what kind of angel investors have come in, what are the what was the founders decision making criteria, or what was the reason why founder onboarded a certain set of angel investors as their first round of investment, etc., etc. So yes, there are few aspects that you look into, but does that necessarily become your own decision making criteria? The answer is no.
All right. Okay. So that was a no for the type of angel investors on the cap table.
Yeah.
If I were to ask you about the number of angel investors and the percentage that was diluted in the cap table during the angel round or any pre VC round, I would say, how do you evaluate them on that basis?
So I think the first thing which it all starts from what a founder is looking to do, right?
Okay.
And when you are looking to raise an angel or a friends and family round effectively, the idea of a smart founder should be very, very clear. What kind of capital I am attracting? Why am I attracting that kind of capital? And whom do I need on board?
Okay.
Right? So effectively, if you have a whole host of people, whole bunch of people who have sort of joined in, are on the cap table when a VC is doing a due diligence, that gives you an understanding, or at least a sense of the fact that probably founder has not thought about it, right? Has not thought deeply in terms of who all they want. It was probably just, a capital raise from a bunch of people rather than really going in depth in terms of why do I need someone at what stage, right? It used to be a concept that individual investors only come in the angel round. That's no more the fact. That probably is the phenomenon which has changed in the past 5 to 7 years. Nowadays, individual investors even do Series B, Series C, right? So they have been investing in growth. So why do I bring someone at earlier stages than later stages has to be very, very clear within a founder's mind.
Okay.
How do I therefore then, build my own round is therefore important. Right? A lot of times we hear that, a certain grade of angel investor sort of came on board early and therefore you had a whole host of people who wanted to join that particular round.
Okay.
So in that sense, in that earlier stages, probably where a VC is not engaged, it becomes a signal, it becomes more like a round formation strategy.
Okay.
But for us, when we are looking at it, having significant number of investors is only going to make your further rounds complicated. So we understand that aspect. So we bring that expertise in. Having diluted way too much or not diluted way too much, both are equally good or bad, right? So it's not like, hey, I only diluted 2% in my first round. Whereas you could have diluted 5% and taken the company from X to Y, right? Why did you not do that? So there is no particular format that we stick to as at least in our own due diligence or even when we are having first conversation with the founder, there is no certain template that we really wish that, hey, this is what they should have done or this is what they should not have done. What we go behind is why did you do it? That gives us a sense of the thought process which is supremely important, because even for us, when we do pre-seed or seed investing, it's pretty much again looking at the founding team, maybe some traction, maybe some product, maybe some POC, but those are all sums, right? The only thing that you have available in full and whole is that founder and that founder's commitment and the purpose why it has been run. So understanding the thought process, the mindset of them through some of these, things that have been done in the company. All that you would have been able to show at that point in time is, hey, I raised it from this, this is the amount of dilution I did, etc., etc. Okay. We don't really go much into, why this happened or why did that happen, but just get into the thought process of why did you dilute 10% or why did you not dilute 10%? Why did you get a certain set of angel investors in? Why did you not get a certain set of angel? Sometimes we see founders who are into deep tech, for example, are raising money from operators who have built B2C, D2C companies, right? So we wish to understand why that happened. It's not necessarily that's a red flag or a green flag. It's not a decision maker or breaker for us, but that gives us a very good deep insight into founder's mind.
Okay, that makes a lot of sense. Talking about the due diligence process, we spoke about the existing investors and investments. Apart from that, if I have to talk about, say, scalability, sustainability, what do you as VCs see that you think maybe angels are seeing or not, but as VCs, what do you see there?
The first very important thing is to look at scalability, right? As a result of how VC's power law operate, which is very different to how an angel may actually evaluate a startup. And by the way, there's nothing wrong or right or nothing wrong or right either way. It's notwithstanding, it's sort of mutually exclusive. But in general, unless you're operating in a very, very large market, or where fundamentally a VC takes a bet that, hey, maybe the market is not large today, but in 5 years' time, I see that happening, right? That is the first criteria that I have at least experienced in my journey of investing from 10 years is a lot of angel investors sort of overlook that.
Okay.
Now, is that necessarily wrong? No, right? You don't really need to know that if a founder has raised an angel round and probably do not ever raise a round and still have been able to get user love, built a crazy product, which you are able to sort of monetize, etc. You don't necessarily just need keep raising round and keep raising capitals for your startup to succeed, right? Eventually, if there is a success that can come through an exit, that can come through an M&A play, etc., that angel investor would continue to sort of benefit from it. So don't just consider that, hey, I did an angel investment and then, a VC followed in and then the company has continued to sort of, being able to raise means is a success trend setter. Not necessarily. At the same point in time, vice versa is also not true that, if the company need to raise capital, they really need capital to fuel the growth and they are not able to for whatever XYZ reasons. Therefore, then, that is also a problem. So I think effectively it boils down to the founder and the founding team. Hey, I have various sources of capital available. There's this whole host of things that you can get into. What is the most effective source of capital today? And should I approach that? Within that, do your own due diligence in terms of who is the right person I should get into, right? There's no point. A lot of founders reach out to me for D2C investment. We don't do D2C investment, right? It's very clearly called out. There is not something that we have been doing, and our portfolio is also an example of that. So do your own due diligence, know what the right source of capital is, and therefore then get into that bandwagon. Right? So that's more important. That is where you actually see all these.
So from a founder's perspective, yes, I am being backed by a VC, but I do need more funds. My VC is not able to give me more funds, or for some other reason, he or she is having other angel investors at the same time. How does that work? Is it okay to do that? Is it not okay? And how does it work at all?
Super important. And I like the fact that you are asking this. A lot of smart founders I've seen have done so much of great homework from whom they want to raise, right? Which kind of VCs they want to even really attract. Because at the 0 to 1 journey, or partially even slightly more towards the growth journey, right? A lot of times who are on your cap table, who is on your board really helps in those initial days. Till the time you have made your own brand name, the startup have made their own brand name, all that you can sort of bring in to a potential customer, to a potential employee, to any conversation that you're having within the ecosystem is, hey, I've probably been backed by that. Doesn't necessarily mean that, that is the right signal. But, in the initial days, you're probably lending the brand of the people who have backed you till the time you have made your own, right? And in that sense, it is very, very important that does the VC or any investor who is coming into, will they have capability, or do they as a practice invest in my follow-on rounds also if I do continuously well, right? If I'm able to move from a milestone X to milestone Y, which probably is a good understanding of that I am growing, my product is working, the users are loving it, etc., etc. There's obviously many things that that could be part of that checklist. If all of that is met, will I get the follow-on funding from the same investor or not? When it is a VC fund, it becomes equally more important. Angels, we all know, would be participating only up to a certain point in time, right? Beyond that, it will be all about larger amounts, larger money to be sort of pulled in, larger sources of capital to be sort of pulled in. But from a VC perspective, if it becomes, a lot of times it becomes a signal setter. That, hey, I actually backed this company at seed level. Why am I not doing the Series A? And then the VC community starts looking at, hey, you're already on the cap table. Are you participating in this round or not? Unless the reasons are very, very credible, very clear, it becomes a difficult point for a founder. It's a difficult position as a founder to be in more than for a VC, that why is your existing investor not backing you in your follow-on rounds? By virtue of how most of the VC modeling is done, significant part of investment for any startup investment is kept as a follow-on reserve, right? So it's, if I were to sort of, let's say, believe that $1 million needs to be invested, maybe at the first stage I will only invest $400,000 to $600,000, depends on what the ratio of follow-on reserves are. And then when the growth rate is visible, when the next round is getting formed, etc., I continue to do that. I am just talking very small numbers, but these are done at a very, very large numbers globally, right? So for a founder, it therefore becomes very, very important. Are they aware of that or not? Have they seen that? Have they spoken to portfolio companies of that fund or the founders where they have known that, hey, wherever the follow-on round happened, did the investor really invest or not? If not, then really be aware of, hey, this will happen or not happen, right? A lot of pre-seed fund are very clear that they don't do Series A, right? So you be conscious of that fact and know that, you will need any other fund to come in at a later stage with a larger pool of capital. But at least you are aware of it. A lot of founders I know are just not aware of this. They just believe that, follow-on will continue to happen, more rounds will continue to happen. So as an angel within that startup, it is equally important for you to know which kind of fund is coming in and whether they have the dry powder to continue to do the follow-on rounds or not. If you're looking for a patient capital, maybe even look at sovereign funds, for example, who will be there for a longer period of time. A VC fund by definition would be for a defined period of shelf life, right? So you got to have these understanding. Gone are the days when founders can, say, okay, I did not know that, etc., etc. Fair, if you did not know that, there is abundant knowledge available. Even more important, the angel investor can bring in that knowledge because now they are a part of this journey as well. And therefore, all of them put together, right? Every investor, member, employee, everyone should come together to see how we can take this forward. So I think just over-indexing on preparedness for VC, I think is sort of an overwhelmed term. It should be more about preparedness for our next round, only because we want to grow from this point to that point. If you're already burning money and you're raising money to just keep burning without having shown much results, you'll always get a feedback from the ecosystem itself. Whichever source of capital again you're looking at, you'll get an immediate feedback that there are certain things which you may not be doing right. Correct that. It's perfectly fine that you had your own shares of ups and downs, etc. But correct that, and then there is abundant amount of capital available for you to pick up.
Right. And also these investors as well, the startups that we are working with, the investors that come in early, they ask the founders to get VC ready. So I think this makes a lot, whatever you've said makes a lot of sense for them. At least they should understand that preparing for the next round is scaling and nothing else.
Absolutely.
It's not about preparing for a VC fund.
Absolutely.
So, yeah,
Absolutely.
that makes sense.
Chances are if things are going in the right direction, you don't have to even prepare for a VC round. Maybe a VC is already preparing for your next round.
That is
and we have seen enough of those cases as well.
So that does happen with all the sectors, or sectors that actually have a future. For example, let me take deep tech, because right now that anything under deep tech is considered to be scalable and would definitely grow to something bigger in the future. So how do you see that there?
I mean, deep tech by definition is a patient capital, right? And why do I say that? The reason I say that is the time it takes for you to build the product and take it to market is higher than some of the other sectors that we have witnessed, right? So any founder who is building in the deep tech space should know that prima facie. And therefore, the choice of capital they should look at should be aligned. Okay. If you are looking at someone who is already looking for an exit in 2 to 3 years, for example, right? Maybe an angel investor or even a family office. If you are bringing on board an investor of a fund, of a VC fund who is actually at the fag end of their investing life, right? These becomes very, very important. Okay. You need to know. A lot of founders, when we have our first conversation with the founders ask us, where are you in the journey? Okay. What have you been doing? What are some of the other investments that you have? It's perfectly fine. It's perfectly fine to have a to and fro and get to know each other better, because you're not signing up for next couple of years. You're probably signing up for minimum of a decade, maybe even more, right? So unless and until you are aligned in what you want to build and for the growth and the success of the company, how do you take the conversation forward? So I think a lot of these, inhibitions should be sort of, let loose. The founder should be in a position where they should be aware of the kind of capital that they are looking for. And if it is particularly, if deep tech, to be honest, if you look at deep tech, it requires a slightly higher patient capital index versus maybe a B2C or a D2C, where the scalability happens faster, but then you need to also set up the tone of how quickly can you scale, right? Moving from probably 0 to 50 crores of ARR can happen fast in that sector, may not happen here. Okay. That just doesn't mean that this is successful and this is a failure. It is very, very different way of evaluation, and founders obviously are aware. I'm hoping the investors are equally aware. They should be aware, I guess. Yeah. So if you are an angel investor or even an aspiring angel investor, be very clear in terms of what kind of investment do you wish to do. If you do not have a very long-term horizon, probably this doesn't make sense, right? If you have a long-term horizon and you're interested in that space, and you can help that founder, then maybe that becomes a choice, right? So those are the ways that an angel investor can also evaluate of what really works. Well, see, at the end of the day, financial investing or investment as such, it is not like, it will always be no one size fits all, right? It'll be very different. It'll be very unique. What works for us as a fund may not work altogether for some other fund, right? At the same stage, for example, what works for a certain angel set of angel investors may not work for someone else, right? So it's very important that the investor makes sure that they are able to communicate what their expectations are. Founders are clear of what they are getting into, and are they aligned on the same shape or not. Or the same curve of the growth of the startup or not. Right. So I am concluding this by telling it's all about human interaction. It is. You talk to the investor and the founder talks a lot. So how does AI come in between this? Because I've been hearing, not just me, but I think everyone has been hearing, AI is kind of playing a very important role in due diligence, startup selection processes and things like that, especially on the VC side. So do you really think that is happening, or how is it helping if it is? It is surely happening. At least we do a lot of US investments. So certainly seeing that happening more often than not. It has picked up momentum on the India side as well. Has it reached its peak already? No. I think we are still slightly far away from that. But we are seeing initial signs of that being implemented. Effectively, you may have a whole host of founders reaching out to you or people who are looking to raise money. All you can do is you can do an AI prompt and make sure that anything that doesn't fall into the thesis, you are able to send an automated message.
Right.
What is happening today? Let's say if a particular fund of a certain size are getting 5,000 requests from the entire founder community, how many can you humanly respond to, right? How many can you actually keep them waiting? How do you really evaluate? So I think in that sense, tools, AI tools or whichever automation tools, I would actually put this for our investor community, I would put it as automation tools rather than really AI.
Okay.
But how any of these automation tools are able to help you get to better productivity.
Okay.
At this point in time, I think as of now, what we are seeing on the ground is how do you become more productive.
All right.
A lot of these AI tools are effectively helping you do that.
Okay.
Going forward, we are looking at how this entire piece can be automated through a bunch of AI prompts itself.
All
Right? And therefore, if you are able to do that, you are able to very clearly selectively believe that, hey, this is the set of people that I wish to speak to based on my past data, my own set governance and guardrails, and therefore get to that very, very quickly rather than going through the entire process. B, you can also effectively, helpfully communicate to the founders whom you are passing on the opportunity. A lot of times I see founders are just waiting for the feedback. They just don't get the feedback, right? So it's important that you continue to do that as a result of it as well.
Right.
And it can happen that you will miss a gold mine as a result of that. But by and large, you'll at least know what you are filtering out versus what you are actually getting into.
Right.
A sector agnostic VC obviously will have a very difficult time.
Yes.
But in that sense, they can actually filter out on if someone is raising more capital or lower capital than what their ideal check sizes are.
Right.
That becomes the case. And therefore, you can send responses accordingly that, hey, maybe this is not the right time or the right stage that we come into. Happy to sort of continue to know your feedback and connect at the right time.
Right.
So like a lot of these productive tools have become helpful. It is being implemented on the ground, and VCs are able to sort of not only VCs, I would say larger investor community are taking advantage of this.
Okay, but how would you say a founder can prepare for an AI due diligence?
So the due diligence process is not completely driven by this. So I think we need to
The
sort of
selection
differentiate it.
process.
I think the filtration criteria,
yes.
selection criteria, a founder can obviously continue to do what best they can, right? You have to at the end of the day have the processes set. But for whatever reason, like you have been filtered out for by whatever tool, and you still believe that is not right, try and reach out. Try and reach out through methods. There are various ways you can do that. You can reach out to a fellow portfolio founder and ask for an introduction. A cold email or intro from a fellow partner would go a very long way than just being filtered out through productivity. So obviously the first way is to go through this, but if you believe that you have not been heard, or you are still somewhere you believe there could be an alignment with this set of investor, then please, there are many more means of getting to that, right? The world used to exist before all of this came. So go back to those methods, try and continue to evaluate from those purposes.
Okay, thank you so much for that. I think we'll conclude the podcast with one last question.
Yep.
What is that one piece of advice you would like to give the founders who are still saying, I'm going to prepare for a VC round?
I think again, I keep going back to fundamentals and basics, right? There is no such concept of preparedness for a VC round. If you are truly looking for preparedness of VC round only, then be aware that there is a certain model on which the VC law operates.
Right.
So being aware of that is very, very important. As a result of operating within that model, what are some of the repercussions, or I won't even say repercussions, what are some of the things that you need to be aware of?
Okay.
Are you operating in a very large TAM? Have you built a clear defensible moat?
Okay.
Have you been able to substantiate that your design partners are going to convert to large contracts, etc., etc.? Now, based on what stage you are, obviously these questions will change, right? At early stages, the questions could be more on how my product has helped the customer.
Right.
So just one line, right? A lot of times I get onto a call when someone writes, hey, my product has helped customer deliver 3x returns.
Okay.
Right? So what is that unique that you are doing?
Right.
Sometimes, it is unimaginable that one small insight within that led to what the startup is today.
Okay.
So able to do the right amount of, I would say, storytelling backed by data is where, the magic starts happening.
All right.
So you got to have an art of both. Again, at early stages, I've been saying this enough and more. It's way more art than science. It will continue to be an art. There will be an human engagement interaction from an evaluation, filtration, every criteria perspective, because there is a completely 360 view of human capital,
Yes.
right? Human engagement. That is something that is obviously will take a longer time for AI to sort of automate that.
Yeah.
Till that point in time, every empathy, every conversation will have its own outcome, will have its own conversation, will lead to something else.
Yes.
Even if that investor is not willing to invest, they may know who may be willing to invest at that round at, and under what objectives and criteria. So
Right.
important to keep doing those conversations, very important to sort of being known, and very important to sort of be available to show up your hand and say, hey, this is what I'm doing. Would you be looking forward to this? So yeah,
Alright.
believe in that more than anything else, and chances are you will be in the right place.
Awesome. Thank you so much for all the advice and the conversation we had. It was really beautiful. And I will see you in the next episode of the podcast. Thank you.